Hey everyone, Couch Investor here, back to another video for you today. In today's video, let's talk about Netflix. We all know Netflix, you pay a monthly fee or steal the password from your sibling or your parents, and then you get unlimited access to the content that there is on Netflix with no ads. Right now, Netflix trades at a price to sales ratio of around 8.5. The market cap right now is at around $220 billion. So in this video, we're going to talk about one specific aspect that could maybe double their value in the next coming years, but it's something that they aren't willing to do right now. This is something that they've been saying for a long time that they don't want to do. So we're going to discuss all of that in this video. Before I do so, I just want to thank everyone that has been subscribing lately. If you haven't subscribed to this channel and you like this content, maybe hit that subscribe button and leave it an early thumbs up, as it really helps me out grow the channel and get my videos out there. I would also thank the Motley for sponsoring this video. And again, these are my views and my views only. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full Offers. Through the Motley Fool's Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, so first a quick look at the graph. Right now, as you can see, the price is just under $500. The same price it was back in July. Right now, I took the average of the highs and the lows. It's a difference of 15% between them. So it's been going sideways for almost a year right now. So if you think you missed your chance when it was at 500 something, almost 600, maybe now is a better time. It's obviously a bit cheaper right now. We're going to look at the earnings in a bit. But it's good to see that a company like Netflix has been going sideways for a while, because if you zoom out, look what has happened in the last 6 years. Moonshots. So it's nice to see a little base forming right here. Right, so you might have noticed on the graph that, well, the stock plunged after the earnings report. Yes, it had to do also something with the market, but mostly because, well, the growth is slowing down. No wonder after a pandemic, after that everyone was home, lots of people subscribed. Maybe those people were meant to subscribe in 2021, that's their projected growth. Obviously, they've grown way faster than other people have expected. So let's take a quick look at their earnings report. All right, so you can see here revenue of $7.1 billion. For Q2, they only project $7.3 billion, so not that much of a growth, but year over year, still 24%. And then for next quarter, projected 18.8%. Operating income more than doubled, so that's great. Operating margins also, net income tripled, diluted earnings per share tripled as well. So on that front, on the cash side, on the money making side, they are doing very, very well. Now this part is the one that obviously concerned the market. So global streaming paid memberships grew only 4 million. That's a 13.6% year over year. And then for next quarter, they only expect 8.1% growth. If you look at this here, you can see how many times they beat the estimate and how many times they failed. So I already calculated this for you. 7 times they missed it. Also a couple of times they missed it by just a fraction. But as you can see right here, forecasted was 6 million. The actual one was 4 million. So that's why the market was pretty disappointed. But it's actually not really a surprise. You can see here the differences between each and every year. You can see 2020 is an outlier because, well, the pandemic hit and suddenly they've grown super fast. So those additions right here might have been additions for 2021. So that line right here might have looked maybe more like 2019, 2018. So yes, the sell-off was obviously correct because, well, growth is slowing down and they project that growth will continue to slow down this year. But I do expect for the second half of 2021 to actually accelerate growth from the first part of the year because, well, new content is coming out on the platform. Obviously, they had to stop shooting last year. So maybe some content has been pushed forward or pushed back, depending on how you look at it. But I do think that with their 207 million paid memberships, they're nowhere near their top. I do believe they could go even higher, maybe double that number, growing other markets as well. Obviously in other markets, it might be even cheaper. Like in India, for example, memberships there are super cheap. Obviously, they could still raise prices and grow their revenue more and more, but that can only happen in markets like the United States or North America and Europe. Other markets won't really experience that much of a rise in prices. Now, there were some rumors that Netflix might be going into video games, and actually makes total sense. They're already making TV shows and movies in partnerships with super popular video games like League of Legends, and they actually made one for their Stranger Things series. They made a video game regarding Stranger Things. We're going to look at that right now. So this was from a couple of weeks back. Netflix really wants to get into video games. The information reported that Netflix is considering a bundle of games available via subscription like Apple Arcade. A Netflix spokesperson told Polygon the company is excited to do more interactive entertainment. The full statement is available below. If you want, I will link the article in the description. And it's also really not a surprise because back in 2019, they actually said that their biggest competitors is actually Fortnite, not the other streaming platforms, but Fortnite, the video game. That's when obviously Fortnite peaked, in my opinion, in popularity. Everyone was playing the video game, but now there's Fortnite, there's Call of Duty. So it's really no surprise that Netflix wants to tap into that market as well. Netflix, as you might know, makes their own TV shows, makes their own movies, so they're growing their IP each and every year. So it doesn't surprise me if Netflix turns out to be a type of Disney brand in the next 10 to 15 years. Maybe in 15 years, you'll see not a Disneyland, but a Netflix land. Who knows? Right now, the most important part of how they could actually double in value, and that's to go into ad-supported TV or ad-supported content, just like on Roku, just like Hulu. We talked about this on Roku and the Trade Desk. If you haven't watched those videos, it's going to be in the top right corner because linear TV is dying down. Connected TV is obviously gaining popularity and is expected to grow more and more each and every year. So why wouldn't Netflix start offering Netflix for free, but with an ad-supported business model? Makes sense because maybe people in the future will have Disney+, HBO, Hulu, ESPN, Apple, whatever, and then they think maybe we're paying too much for too many subscriptions. We wouldn't mind to watch a couple of ads before a TV show, before a movie. Just like when you go to a cinema or a theater, you have like those ads before the movie. Why not have the same thing right here? So actually, in Netflix long view paper, let's say, they actually touched on that point pretty early on. So they say here, we don't offer pay-per-view or free ad-supported content. Those are fine business models that other firms do well. We are about flat fee, unlimited viewing, commercial free. We are not a generic video company that streams all types of videos such as news, user-generated, live sports, porn, music video, and gaming. Well, gaming might change. We are a movie and TV series entertainment network. So yes, they've touched on that point a couple of times already. The CEO has already touched on that as well. He wants to keep Netflix as it is. No ads. You pay, you get the content, and that's it. But in my opinion, and I think in a lot of people's opinion, it's a missed opportunity. And I think maybe in the years to come, they might change their mind because they'll see how much money goes into that business model. And to be honest, I don't think a lot of people would mind watching 1 or 2 ads before a movie or before a TV show. Everybody does it. Everybody already watches it right now. Maybe on YouTube you have an ad right now. Who knows? Does it disturb you? I don't think it does. If it's 1 or 2 here and there, I don't think it's such a big deal. Right, so to conclude, how will Netflix double in value, in my opinion, in the next coming years? So 1, video game industry, pretty big, pretty popular. 2, growing their brand, growing their IP and doing lots of things with it, whether it's video games, whether it's merchandise, maybe a theme park, etc. And 3rd one is the ad-supported business model, the way Roku channel works, the way I think Amazon has. Maybe it's paying, but you have ads there as well. Twitch, Hulu, all those guys are doing it. Roku, Trade Desk, again, like I said, are making tons and tons of money. And this is only the start. This is the 3rd point, is probably the biggest one and the biggest catalyst that if Netflix starts tapping into that market, the stock will skyrocket. And that will be it for this video. Let me know down in the comments below what you think about it. Do you own Netflix stock? You probably have Netflix at home, and if you don't, please let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always guys, take care, stay safe, and see you all in the next video. Bye bye.